The Department of the Interior has added silver to the list of critical minerals. It changes everything for the silver price. The one big source of silver in the United States is Mexico, and that's defined in the report as one of the risks. It's defined as a small risk, i.e. only 4%. But you can imagine a scenario where perhaps Mexico says, right, you've slapped tariffs on us, we're not going to export our silver to America, or maybe they put tariffs on the silver going to America, who knows what. But America is relying on is relying on Mexico to get its silver. And in the event that they couldn't get silver out of Mexico, the US economy would lose billions of dollars because it would have to buy the silver from more difficult to obtain places at higher prices.
Silver just gained a whole new level of importance in the United States. For the first time, the U.S. government has added silver to its official list of critical minerals, as outlined in a Department of the Interior report released on August 25th. This move signals a recognition that silver is not just another commodity, but a strategic resource essential to America's defense sector, electronics industry, and rapidly expanding solar panel market. The decision reflects both supply chain vulnerabilities and rising geopolitical risks that could disrupt the flow of silver into the U.S. economy. Clive Thompson explains that the U.S. relies heavily on imports from Mexico, its primary source of silver. While the official assessment pegs the disruption risk at only 4%, the consequences of even a temporary cutoff could be massive, forcing America to pay higher prices to source silver elsewhere. That's why silver is now viewed as a material worth stockpiling again, after years of government sell-offs. For investors, this shift could establish a price floor for silver, generating substantial gains for well-positioned mining companies. As demand tightens and policy risk rises, silver's future looks brighter than ever. If you enjoyed this analysis, don't forget to like, subscribe, and share your thoughts below.
Silver has a new status from the 25th of August, a couple of days ago. It's been added by the US government to the US critical minerals list. That's in a report on the US government issued on the 25th of August. And basically, it's the first time it's been put on the critical minerals list. Why has silver been put on the critical minerals list? It's because silver is very important to the USA in two main strategic areas. One is the defense industry, and the second one is the electronics industry. Of course, we mustn't forget the solar panels industry, which is maybe a subset of the electronics industry. The reason it's been put on the critical minerals list is because they need to stockpile it to protect against any disruption in supply. And the biggest supply of silver coming into America is coming from Mexico. Now, you might say, well, there's no risk to that supply coming out of Mexico, but they've assessed the risk at a 4% probability. Low probability that the supply would be disrupted, but high impact. So how could the supply from Mexico be disrupted? Well, it could be that Mexico unilaterally decides to prevent silver from being exported to the United States, maybe in retaliation for some tariff spat, for example, or it could be that there might be some civil or military unrest in Mexico or some other event which causes like a generalized industrial action, for example, which causes silver supplies to be disrupted. Not a very high probability, but it's not impossible. So that's why America has put silver on its strategic reserves. Now, they did sell off all their stockpiles in the past. Up till 2000, they were selling almost all of their silver. They may have a little bit left now, but clearly now it's become a strategic mineral. They'll have to rebuild that stockpile, which should, in my opinion, put a bit of a floor under the silver price. By the way, I will be releasing in the coming day or two a report on the silver mining companies. I've done a lot of research over the last few months. I'm doing 8 hours a day research on it for a few weeks now, and I hope to come up with a list of silver mining companies, which would be net beneficiaries, big beneficiaries in some cases, of a higher silver price. Some of those companies could potentially be 40 or even 100 baggers. 100 bagger is a stock which goes up to 100 times its previous price. Now, that's not an investment recommendation. It's just talking about possibilities, and some of those possibilities would depend on what happens to the silver price, as well as lots of other things. And of course, the companies with the biggest potential typically are the most risky. They might be mining in places which are politically unstable, or they might have a very high cost of mining, which would benefit greatly from a higher silver price, but would be very bad for the company with a lower silver price. We will have what's called the PCE inflation number. That's personal consumer expenditure. It measures the consumer spending and price changes, and it's what's known as the Federal Reserve's preferred inflation gauge. So the market is expecting 2.7%. If that number comes in showing higher inflation than 2.7%, the probability of a rate cut in September will drop. If that number comes in lower than 2.7%, it's very likely that the probability of a rate cut in September will move closer to 100%. It's currently about 85, 87% probability, 87% I think I read. So if the reading comes in above 2.7%, the personal consumer expenditure, the Fed might make some signals that it's still mulling over the data whether to reduce the rates in September. On the other hand, if it comes in lower, the probability of a rate cut goes up. Tomorrow, we've got two speakers from the Federal Reserve who are speaking. We've got Michelle Bowman, who'll be speaking at 2 p.m. in Kansas City. Now, she is known as one of the dissenters at the FOMC meeting in July. What does that mean? It means that when they had the vote on cutting interest rates, collectively, the Board of Governors of the Federal Reserve decided not to cut interest rates in the July meeting. But she was one of two people on the Federal Reserve Board of Governors who voted that they should cut interest rates. Anyway, she'll be speaking tomorrow, and we'll see what more she's got to say. But we're also going to have, on Monday next week, Jerome Powell will be speaking, and probably he's going to address the question of Federal Reserve independence, given that the Federal Reserve is now under attack from President Donald Trump, and he'll probably also talk about policy direction. Now, the market will be watching that with, ears wide open to see if there's any sign that he's caving in to President Trump's desire to have multiple rate cuts. We shall see.
Silver's role as a strategic asset has never been clearer. With the U.S. Department of the Interior officially adding silver to the list of critical minerals, demand for the metal is now being supported by more than just investors. It's now backed by national policy. Beyond its use in defense, electronics, and solar, the supply chain risk is significant. Mexico provides the bulk of U.S. imports, and even a low-probability disruption, whether from tariffs or internal unrest, could send shockwaves through the economy. That reality makes stockpiling inevitable and sets a natural floor under silver prices. Clive Thompson emphasizes the various ways investors can gain exposure, including junk silver coins, bullion coins such as eagles and maple leafs, physical bars, ETFs, or carefully chosen mining companies. With ETFs already beginning to outperform the metal itself, capital rotation into silver miners could accelerate dramatically. The setup is powerful and worth close attention. Let's get back to the interview.
You can buy silver in lots of different ways. If you want physical coins or bars, most large coin dealers will sell you quantities of silver. Bear in mind that you might have taxes depending on the country you live in when you buy, and there'll be also quite a premium over the silver price because it costs a lot of money to make the coins or the bars and to distribute them through the dealers. And of course, the dealer's got to pay his rent and have his markup to make a profit. So don't expect to be able to buy silver at the silver price if you're buying a physical metal in small quantities. And if you're buying a physical metal, what sort of metal would I suggest you buy? Well, I think there's three types which are interesting, maybe four. The first type is in the country where you live. They probably had silver coins of the realm. So in the UK, I think that's silver coins pre-1947. In Switzerland, it's pre-1967. I don't know what year it was in America. I haven't got that in my head, but it's probably pre-19. No, it was 64, I'm guessing, but doesn't really matter. But you can look it up easily and find out what coins existed in silver in your country, and almost certainly in many places you'll be able to buy bags of these coins, which will be recognised by citizens of the country. That's a good way to buy junk silver coin, or it's called junk silver coins. The second way is to buy what's known as bullion coins. These are well-known coins like Krugerrands, maple leaves, harmonicas, Britannias, American Eagles, and so forth. You buy these coins and you can buy them in boxes of, you can buy them in any size really, but let's say you wanted what's called a monster box. That's 500 coins, that's 500 ounces. It's quite a lot of silver, pretty heavy, but you're getting something which is starting to look really great if you've got a monster box full of silver coins. And because they're bullion coins, they trade at the lowest premium over the silver price. Then you can buy another type of coin, which I kind of call collector coins. They're not particularly rare, but they're fun to get. So, for example, in various countries, they have different types of collections. For example, in Canada, they have the Arctic Animals collection. In the UK, they have the Queen's Beast collection. In Australia, they have the lunar animals, the lunar coins they're called, with all the different animals of the zodiac. And each year they'll bring out a new animal and you can buy the coins. But of course, you'll find it very hard to get anything other than the current year. But it's great fun to collect the current year and then see if you can find the coins from the previous years. And over time, if you're lucky, you might get the full collection by looking around a bit here and there on eBay and auction sites and local places where you could be looking. So that's getting the coins. Then you can buy bars, physical bars, and the physical bars come in sizes or 1 ounce, 10 grams, 50 grams, 100 grams, 1 kilogram, 400 ounces, that's a very large bar, and so forth. So you can buy physical like that too. What if you want to not have the physical? Well, the advantage of not having the physical and having it in custody is the spread, the bid-ask spread is usually a lot less. So if you buy through a big bank who sells silver, or through a broker or a dealer, you can probably buy quite large quantities of silver and have them stored by the institution concerned. That's not a bad idea, and often it's a way of not paying the local tax, the VAT or sales tax that you might have in your country. Another way of buying silver is through the exchange traded funds. I would recommend that you go for an exchange traded fund which trades on the stock exchange of your country, and also one which is described as physical silver. So it says they hold the physical silver, and most of them do, but just double check the fact sheet. So you look up, if you want to choose one, you look up exchange traded funds silver, and you'll find one probably in your country, and then you can buy, make sure it says physical silver. If you're not sure, download the fact sheet from the website and just check it says physical silver held, and then you could buy that. And the last way you can buy into or get exposure to the silver price is through the silver mining companies. Now, I will be releasing in the coming day or two a list of, it's taken months of research, a list of excellent silver mining companies. Some of them have the potential to be, lots of them have the potential to be 10 baggers. 10 baggers means you could get 10 times what you invest. There's one or two which could be 40 baggers, and there's even one which I think might be 100 bagger. Of course, it won't be investment recommendations, and there's no guarantee if I tell you something could be 100 bagger that it will be, because usually that's a very leveraged company where it will only make that sort of money if the silver price goes up to, say, $50 over the next 4 or 5 years. But yeah, buying silver mining companies which haven't yet started production is a risky game. They're probably sitting on a lot of holes in the ground. Every prospecting company is nothing but a hole in the ground with a liar sitting on the top. So even if they're not lying, it could take many years before they dig the silver out of the ground, because it takes many hundreds of millions of dollars to do that. And you'll find that many of these prospecting companies have nothing like the money which is required to dig it up. So they just keep looking and looking, and then hoping that someone will buy that what they found off them. But at the end of the day, they're not going to be able to dig it up. So that's why I say go for the companies which are already digging up the gold, the silver or the gold, if we look at it, but silver in this case, digging up the silver and are successfully selling it so that they make a profit, because those are the companies that are most likely to survive, but also will benefit a lot if the silver price goes up. If you can't pick your individual silver mining companies, or you don't want to listen to my video where I've done the hard work for you, then what you can do is buy a silver mining company ETF. There are several out there. They're called exchange traded funds, and you look for the symbol. We put in a silver ETF, and you'll find one, for example, with the major silver companies. You'll find another one with the junior silver mining companies. I think that's a nice, easy way to get exposure to the market if you don't want to pick your individual stocks. Is money going to go into the silver market? Yes, I think so. We're seeing the exchange traded funds just starting to rise a little bit faster than the silver price now. It's also starting to rise faster than the stock market. The silver mining sector is a very tiny sector of the stock market, so a small amount of money coming out of the tech sector going into the silver mining sector could boost the silver mining stocks a lot. Ladies and gentlemen, that's all I've got to say on the silver news, i.e. that the Department of the Interior has added silver to the list of critical minerals. It changes everything for the silver price.
Silver's addition to the U.S. critical minerals list is not just a technicality, it's a game changer. By designating silver as essential to national security and industrial stability, Washington has effectively put a spotlight on supply chains that were once taken for granted. Mexico remains the largest source of U.S. silver imports, and although officials classify the risk of disruption as only 4%, the consequences of a supply squeeze could be catastrophic. Tariffs, political tension, or civil unrest south of the border would force America to source silver from more expensive and less accessible regions, driving costs higher and fueling inflationary pressures. That's why the U.S. is preparing to rebuild stockpiles it once sold off, and in doing so, is setting a natural floor under the silver price. For investors, this recognition creates a structural tailwind. From bullion coins like American Eagles and Maple Leafs to bars, ETFs, and carefully selected mining companies, there are many entry points into the market. Even small amounts of institutional money rotating into the tiny silver sector can create outsized moves. Mining equities, in particular, are likely to benefit as silver's strategic status increases, although they carry a higher risk. What's clear is that silver is no longer just another commodity. It's becoming a critical pillar of the global economy, one tied to defense, energy, and technology. With these forces aligning, the long-term upside is hard to ignore. If you found this analysis helpful, don't forget to hit the like button, subscribe to the channel, and share your thoughts in the comments below.